If you have property, what you ought to pay as rental tax as an individual would be much more than you having it as company assets, okay? Due to various reasons, because you are allowed the deductions. Well, if you are an individual, they are capped to a certain percentage. Now, for businesses that are engaged in the letting of property, whether commercial or residential, we allow any deductions that you incur to come up with that chargeable income in that year. For example, if you have, let's say, a building, okay, you incur costs like electricity, refurbishments, and all those. They are allowed because they help you generate the income. Withholding tax is just if it's on payments. For those companies that deal, let's say, with government, they withhold part of the money at source. Okay. Now, when they withhold this money, for you to claim it as a tax credit, one is the withholding agent is supposed to give you a certificate, a withholding tax certificate, so that at the end of the year, when you've aggregated all your chargeable income, you're going to include the income that you did on those supplies. Value-added tax is an indirect tax that is paid by a person who consumes or imports goods or services in Uganda. The tax is charged on value addition at the different stages in production or supply of goods and services. There are key terms where there is output tax, that is the tax that you charge on the supply. Input tax is VAT over taxable person that is charged on purchases or expenses incurred for business purposes. A taxable supply is a supply other than an exempt supply. Because the exempt supplies, there's no VAT charged on an exempt supply. So a taxable supply could be a zero-rated supply or a standard-rated supply. Then a taxable person is one who is either registered for VAT or a person not yet registered but is required to register. For VAT, you can register. There's forceful registration and there's the voluntary registration. For you to be compulsorily registered for VAT, there's that threshold of 150 million a year. Okay, so if you make supplies of above 150 in a year, you ought to be registered for VAT, or 37.5 for 3 consecutive months. Then if you make supplies or you deal in vertible supplies. Voluntary is you want to be registered for VAT, much as you're not making those supplies. However, there's criteria that you must have for you to be registered. One is you must have a fixed place of a board. Then the vertible value, this is the price that you're paying for that particular supply. Consideration is how much you're paying for the supply. Exempt supply, these are the ones that are not vertible. That is, they do not have the 0% rate or the 18% rate, and they're specified in the second schedule of the VAT Act. Then the zero rated are the ones in the third schedule at 0%. The difference comes in for an exempt supply. They usually allow you input tax credit as for VAT that you were charged when you were buying the commodities or the goods. Now, when you claim for an exempt supply, they do not usually grant because you've not charged any, or they usually apportion the input tax to be allowed depending on the percentages of your taxable supplies and exempt supplies. They cannot allow all the purchases in regards to the goods or any expenses in the business if you're dealing in exempt supplies. Then the exempt imports, these are imports that are stated in the 5th schedule of the East African Customs Management Act. There's some goods on importation that are exempt from VAT. The scope, it's chargeable on both local and imported supplies, and there are 3 categories. There's the taxable supply of goods or services made by a taxable person within Uganda. Now, this is the point at which VAT is charged. Let's say you're buying maybe water, it's 1,000. It's a taxable supply, so you buy it at usually it's 1,000. Okay, that's usually inclusive of the VAT amount. Then it's also an importation of goods other than those classified in the VAT Act as exempt. and any imported supplies.
I am